Okay. Now let's look for someone who already owns a house, like yourself, who's out there in Hawaii, who's built up all this equity. For people who don't understand what equity is, you purchase a home for one price and the value of the home goes up the market right now. So you have that little cushion of what you owe on the house versus what the house is worth. Some people have so much equity right now. Some people have, 100,000, 200,000, $1 million, half a million, whatever. What can I do with that equity? Should I leave my equity there? What are some options I can do with this equity that's built up into my house?
That's a good question. I get asked that a lot. When it comes down to the equity within your home, especially right now, um, again, rising costs, just you see things all over the place. In terms of just the equity alone, you can use that if you want to go into investing properties, if you're looking to expand your portfolio in a sense, if you want to add in real estate and pick up like a small condo, an apartment, or another home like that to rent out. That's one way of looking at it. If you want to increase that equitable margin within your own property, renovations are a very, very popular item at this moment. But as I was stating when I first started, cost of lumber, things associated with renovating your home makes that a little bit of a slippery slope because it's costing so much and you're draining all of your equity out of it to try to get that done. So just have to be careful in that aspect. But again, to answer that more directly, when it comes down to renovating the home, investing in future properties or other properties, those are the main two tickets that I see so far.
Let me ask you this question. So you brought up a very good point about the rising cost of materials, which is connected to inflation. Inflation, price of services, goods and services goes up. So it only makes sense that lumber and bricks and concrete, I don't know the whole recipe to build a house, but those things seems like that's what happens to, the price of it goes up. So you say, hey, if I go out and renovate the material, I could be buying at a premium, meaning a higher price. Versus what if I just took a HELOC or took out a HELOC loan, and maybe that's the only way I can look at you getting your equity out of your house. And when it purchase land, because land, just vacant land right now is benefiting from inflation. What do you think about that concept?
That's one way to take a look at that. You mentioned before about pulling equity out of your home. You can do it through your HELOC, or you can do it through a cash out refinance as well. So that way you're able to
That's a
really
good question, but I want to ask you that question. I mean, you cut you off there. What are some ways that I can use or take out the cash or take out the money and equity in my house? What can I do with it?
so with that, what can you do with it? Again, once that money comes out, depending on what loan product you select, let's say if it's a VA cash out, that money's going to be yours. Same thing with conventional and so forth. So you can do what you want with it once that money's in hand. So if you want to go out, again, use that money to assist to purchase a secondary home or an investment, you can to land. You can also do that as well. Um, Also going in any other different type of investments that are out there. But those are those primary aspects that I see more people doing now than ever, really. And the cash out option has really been a very popular one, considering that equitable equity within your home is really just it's just exploded. So every time you turn around there, it's just become your home is becoming more and more valuable, which is also feeding into that mindset of the average buyer, because they see that taking place. And when we thought that was going to stop, it hasn't, and it's been steady throughout. And I think that's really been what's been a driving factor of why you keep seeing more buyers come out to the market. You're not being so afraid of what those higher costs and price they're being asked of the seller.
So, like, how does that really work? Let's say the cash out option and the HELOC option. How does that really work? What are those things?
So for your cash out, essentially what it is they're going to come out and evaluate your home, and they're going to give you what they call like an appraisal value for your property. Based off of that value, you'll be able to go through and effectively complete your loan at that said value amount. So, for instance, if I have my home currently, and let's say I owe $400,000 on my home, but I've had it for several years, and I want to take out a cash out refinance, and I get it appraised, and it comes back at 600,000. So I got $200,000 there of equity within my house. Depending on whatever loan product that you're using, they'll give you a percentage of how much of that money you can take out. I use VA because a lot of folks out here do that. You can go up to 100%. So that 200,000 is fair game. Now, with that cash out option, you're going to have to income qualify for that. So whatever you take out, essentially whatever you're making has to make up for it. You see how that works? Where you're taking that money out. I have my 200,000, but my loan amount will now be 600,000. So I need to qualify for that 600,000. For your HELOC will establish itself like a line of credit, much like a credit card. So the equity is there. It'll come out as revolving, and it'll just sit there. You can use that money for whatever you want to do, whether it be a renovation, whether it's to pay off a vehicle or debts or things of that nature. But it does not go away like how cash would just be spent and it's no longer there. It sits there just like a revolving line of credit for what it is. And then you have at some point you need to repay that off, take it down to a zero balance to which you'll still sit and be there. Or to close it out, you can take out another refinance, such as a cash out, to close it out, essentially close the loop. But yeah, HELOCs are very popular in the sense that people can hold on to it for over as long as they want, really, and be able to utilize it for different reasons.
Okay. So it's looking at those two concepts. You look at it. Would you even look at that as a possible vehicle for investing, or you just say, just doing the math, just leave it alone and go find another way to finance your future investment endeavors? How do you look at it?
I definitely look at it as a vehicle for investing. HELOCs are several methods about going out and using that particular method to go and increase like your real estate portfolio. You're able to go out and get different investments. It just requires a disciplined mind. So once you're using it, it's just like a credit card. So as you spend on that, you have to be disciplined in terms of how you're using your debts and the money that you're making that way. Whatever you're spending, you're able to replenish or put back. So that's one popular method. People love to use that HELOC to, again, kind of set themselves straight and move themselves forward. The same thing with cash out refinances. Again, that's not a line of credit, but at the same time, people are using that vehicle to, again, purchase investment properties, or, you know what, maybe it's time for me to take out this equity within my home. I can rent out my current property and go buy a new primary residence someplace else. That's something that I encounter a lot here as well. And many people can use that across the nation. I mean, right now it's probably being used or thought of more often because there's so much equity being added to the homes based off the current market.
Okay. Well, I could see that as a popular move of things like that, because you have a lot of people who are currently in their homes and they're saying, hey, I built up all this equity due to the rise of home values, things like that. Maybe they had it for a couple of years. They may be looking for some other ways to get inside of it. Now,